What's going on, everybody, and welcome to the video. In this one, I want to talk about Groupon, ticker GRPN. Some insider made a massive purchase in this company, almost worth $50 million, okay? And I'll show you that in a second. And to key point out, the company only has a market cap of $221 million. That is a massive purchase in this company. So before we get into that, I'll ask if you do enjoy this type of content is that you subscribe to the channel and you turn on post notifications so you don't miss out on any of my future videos. But let's go ahead and get straight into it. So I will show you right here on FinViz, we can see Barta Jan on December 20th, so last week, bought $48.9 million worth of Groupon stock. The stock has been in a massive downtrend recently. Over the past week, probably due to the fact that the company just made a huge insider transaction, the stock is up 7%. But over the past 3 months, it's down 20%, and over the past year, down 71%. Even over the past 5 years, it's down 93%. The stock is not doing very well, and I want to talk about some kind of key catalysts that are very important to consider right now, and why this could be a massive short squeeze play. So let's go ahead and first off get into who Groupon is. So I'll show you a few key statistics real quick. But forward PE on this company is 11.52, and that's assuming that they can hit these numbers, which is a very undervalued company. But first up, short float is 25.21% with a short ratio of 4.64. Kind of a key basis in the markets, and this does not necessarily mean that it will 100% short squeeze. But once a company reaches about 5, it's almost like a sure tale that the company is about to be short squeezed, okay? So I want to talk about a few more things. Sales are just continuously down, but let me kind of show you a few more things. They have a terrible profit margin, a terrible operating margin. Quarterly revenue growth is down. Leverage free cash flow and operating cash flow, both highly negative, almost 50% of the company's market cap worth. And as we saw, the short percent is very, very high. So this company just is almost looking like a perfect target for a short squeeze. But I'm not trying to bash on this company. There could be good things. I could be completely wrong. They do say that they have better plans ahead of them. But let's go ahead and kind of show you a few key things. So if you don't know who Groupon is, pretty much they connect customers like you and me to other companies, and they provide huge discounts and all these different things. Buy a Sam's Club membership for 60% off for $20, for an entire year. In Groupon, because of this, they get some fees, they get some payments for this by helping connect customers to other companies. But there is some big stuff going on with Groupon right now. Let's go ahead and talk about the class action lawsuit filed against Groupon. So pretty much what happened was a class action lawsuit was filed against Groupon on last Tuesday. I believe that was the 21st or the 22nd, alleging that the Chicago business listed thousands of small businesses without consent. So to kind of break that down, let's just say, for example, thousands of these companies, like let's just say Quick Car Dallas or Sam's Club membership, all these companies were pretty much listed without consent from Groupon. So Groupon was just handing out all these discounts without, let's just say, I'm using an example. I don't know if Sam's Club was actually one of the companies, but say they use Sam's Club membership, they offer these discounts, but Sam's Club has no idea, and that's pretty illegal. And so if this is true, that's going to be a massive catalyst for this to short squeeze even further. Just more people shorting the stock, especially with it already being highly shorted. That's very interesting. But it alleges that the plaintiff's information without permission. These pages only serve to benefit Groupon, and that Groupon's conduct confuses customers and harms the plaintiffs and other businesses. If this is true, it seeks more than $5 million in compensatory damages, which is a lot of money, but to a company like this, it could just be a little small dent. Groupon has 21 days to respond to this lawsuit, so we'll get that catalyst coming up pretty soon, which will be very interesting. So also from the plaintiffs, it also claimed that one of the plaintiffs was a salon. It said that Groupon put in the salon's inaccurate and false description on the website, which kind of further proves that Groupon is just doing this for their benefit, using fake business listings to expand its own customer base by diverting search engine traffic. So this is definitely something to keep in mind. This is a very risky play. There's no guarantee that the stock will squeeze, but let me go ahead and show you a little bit more. The company for the third quarter of 2022 reported a net loss of $55.5 million. I'll show you in a presentation, but North America revenue makes up the majority of this company, and it was $107.9 million, which was down 25% compared to last year. International revenue was down 49% to $36.5 million. So these are definitely big, and also I'll just show you the customer bases right now. As we saw, revenue was down. The North American active local customers is decreasing, so that kind of makes sense that the revenue is down, but international active customers is increasing quarter over quarter. So This is showing that their local active customers are spending less money or just really not that active as they need them to be. The company's making huge losses right now. But to kind of go further into this, this is very important. Their biggest sector is decreasing, so that is another reason to short the stock per se. And I'm not telling you to short a stock. I'm not a financial advisor and all that stuff. But gross profit was pretty high, but it's still down 31%, down 33%. And as we saw, even with gross profit being very high, the company is still losing a ton of money. Earnings per share non-GAAP was 68 cents per share. The estimate was about 56 cents per share of a loss. Last year, it reported 38 cents per share. So this is a huge turnaround in this company in a negative way. You don't want to see your company go from 38 cents positive to 68 cents negative. Huge catalyst for people to be shorting this stock. But they do have some expected improvements. They can say this and that. But they expect to kind of get about 100 million in annual free cash flow for 2023. Assumes local billings are 60% of 2019 billings. So that's kind of just almost a telltale sign that this is a dead company. They're aiming to get 60% of the 2019 numbers in 2023. It should be the other way around. 2023's numbers, 2019's numbers should have been 60% of what 2023 is, per se. I'll just kind of show you real quick. Revenue, as we can see, is just decreasing year over year. Gross profit, same thing pretty much. Net income, not looking too solid. So this company is definitely in a struggle. There's reasons why the stock is being shorted. But another good thing I will say about the company is negative $2.06 in EPS this year compared to 63 cents positive next year's the expectation. That would be a huge turnaround if they can do this. Groupon is saying they can save about $150 million. They have $300 million in cash right now. They're saying they could save about $150 million in expenses next year if they can do that. That'll be very interesting to see how successful they make that. They have decreased some expenses, which could relate to why their revenues are down, but still, I feel like it's no excuse. I get it, but you kind of get what I'm saying, where you're making a huge loss. Maybe decreasing expenses by this much and still having a massive loss is not the right move. But sales are expected to grow by 5.1%. And the last thing I will talk about before I give my final thoughts on this company is inflow to outflow is still pretty good. Institutions are still buying. The last quarter, though, there's been a lot more selling pressure than buying pressure, so it is definitely a trigger to think about. We can just see companies are selling. Vanguard sold 18% of their position in their $12.12 million position. So it's definitely something to consider. A lot of companies might be seeing this as a stock to get out of. The current consensus is like a hold to sell. Not a strong sell, not a strong buy, not a buy. It's more on the hold side, but it is still a little bit of a sell. So to kind of give my final thoughts, I think if you're going to play this, I don't know if shorting it is the right answer just because of the high potential of a short squeeze coming on the stock very soon. But if you're going to play it, be careful, make sure you know what you're doing. Do your own research. It seems to be catching momentum, so maybe short sellers will be squeezed out, especially if you can cross past the 50-day moving average. That would be a bullish sign, a bullish indicator. But keep in fact the class action lawsuit catalyst coming up very soon is going to be important to keep in mind. But that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future content. Thank you for making it to the end of this one, and I will see you at the next video.